At some point, almost everyone faces a version of this question. Maybe it's early in your career, choosing between a government position and a private sector offer. Maybe it's mid-career, when the stability of a government job starts looking attractive in ways it didn't at 22. Maybe it's someone in your family asking why you're still in the private sector when the government job has a pension. And the conversation that follows is almost always emotional before it's mathematical. Government jobs mean security but low pay. Private jobs mean money but stress and uncertainty. That's the shorthand most people operate with. And like most shorthand, it's partially true, broadly incomplete, and quietly misleading in ways that shape major life decisions without anyone fully examining the assumptions underneath. The real comparison, the one worth having, is more nuanced than either side of that argument. And when you look at it honestly, the answer depends on factors most people never think to measure. The standard framing of this comparison is salary. Private sector pays more. Government sector pays less, but offers security. Pick your priority. But salary is one of the least complete ways to evaluate total career compensation. And when you include every dimension of what a job actually provides, the benefits, the retirement structure, the job security value, the working hours, the stress load, the trajectory, the comparison looks fundamentally different than the headline numbers suggest. The mistake most people make is comparing gross salaries without accounting for what each job actually delivers for that salary. A government job paying $60,000 with a defined pension, full health coverage, guaranteed annual increments, and genuine job security is not the same financial proposition as a private job paying $75,000 with a modest 401k match, expensive health insurance, no pension, and a layoff risk that materializes every time the economy contracts. Those aren't equivalent offers with a $15,000 gap. They're structurally different financial arrangements that require a completely different framework to compare honestly. Let's start with the piece of the government job that gets the most attention but is understood the least clearly: the pension. A defined benefit pension is, in financial terms, an asset that most private sector workers will never have access to. It guarantees a specific monthly income in retirement regardless of what the market does, regardless of whether you made good investment decisions, regardless of how long you live. For someone who spends 30 years in a government position, the pension income in retirement can represent an asset equivalent to several $100,000 or more, depending on the payout structure. The private sector equivalent, the 401k, requires the employee to bear all the investment risk, make all the allocation decisions, and hope that the market performs reasonably over their working lifetime. The 401k can produce more wealth than a pension if everything goes well. It can also produce significantly less if contributions are inconsistent, returns are poor, or withdrawals happen at the wrong time. The pension eliminates that variance entirely. And eliminating variance in retirement income has a value that doesn't appear anywhere in a salary comparison. Health insurance is the second piece that changes the comparison significantly. Government positions typically offer comprehensive coverage at subsidized rates. Private sector employment ranges from excellent coverage at reasonable cost to expensive plans with high deductibles that effectively represent a significant annual pay cut. For a family, the difference between a government health plan and a typical private sector plan can represent $5,000 to $15,000 in annual out-of-pocket difference, a gap that narrows or eliminates the salary advantage considerably. Job security is the third dimension, and it's the hardest to quantify, but arguably the most financially significant over a full career. Private sector employment is genuinely cyclical. Economic contractions produce layoffs, industry disruptions eliminate entire job categories, company restructurings remove positions that seemed permanent. Each involuntary career interruption, job search periods, income gaps, forced career pivots, has a real financial cost in lost earnings, depleted savings, and disrupted compounding. Government employment, while not perfectly immune to budget cuts and restructuring, offers a level of stability that is structurally different from private sector exposure. Over a 30-year career, the private sector worker who never faces involuntary unemployment is in a small and fortunate minority. The government worker for whom this is the norm is in the majority. That difference in career continuity, compounded over decades, has a financial value that salary comparisons never capture. On the other side of the ledger, the private sector offers something equally real and worth naming honestly: income growth potential that government salary structures simply don't match. In most government roles, pay is determined by grade, step, and increment schedules. Performance above the average doesn't dramatically accelerate compensation. In the private sector, particularly in fields like technology, finance, sales, and professional services, performance can produce income growth that outpaces any government equivalent by a significant margin. For someone with high earning potential in a high-growth field, the private sector ceiling is genuinely higher. The trade is accepting the floor risk in exchange for accessing that ceiling. For someone with moderate income expectations in a stable field, the government structure may deliver a better total financial outcome even at a lower headline salary, because the floor is higher, the benefits are better, and the retirement is guaranteed. Here's the reframe that makes this comparison actually useful, instead of just interesting. The question isn't which type of job is better, it's which financial structure matches your specific risk tolerance, your income expectations, your life stage, and your financial goals. Someone who is genuinely risk-averse, who values predictability, who has family responsibilities that make income uncertainty genuinely harmful, and whose skills fall in a range where government and private sector salaries aren't dramatically different, that person's calculation almost always favors the government structure when total compensation is counted honestly. Someone with high earning potential in a field where private sector compensation dramatically outpaces government equivalents, who has the financial discipline to invest the salary difference consistently, and who has the risk tolerance to absorb career uncertainty. That person's calculation may genuinely favor the private sector, but only if the behavioral component holds. Only if the salary premium actually gets invested rather than absorbed into lifestyle. The private sector advantage is theoretical until it's executed. The government advantage is structural and shows up regardless of behavior. That asymmetry matters enormously and almost never appears in the conversation. If you're making this decision or reconsidering it, 3 questions are worth answering honestly before salary becomes the focus. The first is what your actual risk tolerance is, not what you'd like it to be, but how you actually respond to income uncertainty. If a job loss would create genuine financial crisis within 3 months, the security premium of government employment has significant financial value for you specifically. The second is whether the private sector salary premium in your field is large enough to matter after accounting for the benefit differences. Run the honest comparison including health insurance cost, retirement contribution differences, and the absence of pension income in retirement. In many fields and at many salary levels, the private sector premium largely disappears when these are included. The third is whether you have the financial discipline to actually invest the private sector salary advantage if it exists. The math of the private sector only works if the premium gets invested consistently. If it gets absorbed into lifestyle, which is what happens to most salary increases for most people, the government job with its automatic pension accumulation often wins the 30-year comparison by default. Neither path is wrong. Neither path is obviously better. Both can produce financial security, and both can produce financial fragility, depending entirely on how they're approached and what surrounds them. The government job that feels like settling might be delivering $400,000 in lifetime benefit value that never appears on a pay stub. The private sector job that feels like winning might be creating income exposure and retirement uncertainty that the salary never fully compensates for. See the full picture before you choose. And if you've already chosen, understand the full picture of what you have so you can use it as deliberately as it deserves. The best financial decision isn't the one that looks best in the headline. It's the one that works best for your actual life, your actual risk tolerance, and your actual long-term financial structure. That's worth knowing before the decision is made, and worth understanding clearly if it already has been.